Hey, good morning, good morning, good morning. How's everybody doing? Today, I'm gonna give you a quick little recap of why we called out some of the trades that we did call out this morning in our live room. But hey, the live room it's like a huge family. Come in. It's gonna be a lot of foreign things at first. You come in and see the same pattern and setup play out over and over and over again. Then that's what becomes repeatable over time. So if you are watching this or the recording, just in the comments real quick, just share with me where you're watching this from. Love to see it. But yeah, the purpose of this call real quick or hop on, I just want to show you how, once again, we use the same tools, same patterns over and over and over again. And once you get the grasp of it, you have all the software on your charts, and you could follow along and see exactly what we're trying to do. And today wasn't a what I want to say wasn't a grand slam. It could have been, but once again, the market stopped me out just a little bit too soon, and we like to say bummer, green bag. So with that being said, in the next 10 or 12 minutes, I'm going to show you how I day trade, how I swing trade, and how I invest using the same tools, but just different patterns on different time frames. And we have a lot more on the inside, but I believe that each of us have different trading personalities and tendencies we like to see in the market. And with that being said, there's a pattern, right, for you. Some people like to be, so let me explain. Some people are more aggressive. Some people are more conservative, and that's totally fine. This one I'm going to show you the Profit Pivots and Swing Master Pro combined like a snowball. It is for someone who kind of likes to day trade on the quicker scale of things, where a lot of times we're in and out of the trade and make our money in 2 to 6 minutes, really, or 10 minutes or less. If you're looking to take a trade and sit in the trade all day long and put a take profit of 40 points and a stop loss of 40 points, this specific strategy, I would say, is probably not going to be for you. And but we do have other styles, like I said, that make things even more simplified in the end. So with that being said, we're going to dive right in. We're going to rock and roll, and I'm going to show you how we had another green day in the book. So on the first chart we have, you can see the smiley face. This is ES, right? Real simple. The candles were green, but we're between two of our pivots here, and when the pivots, we hit a pivot and the candle, right, is red, then we're looking to take shorts. So this candle right here hit the pivot, it closed. I'm going to take a breakdown right there. Didn't like the size of it, but it was a valid breakdown. The next candle, right, hit the pivot, so I can move my breakdown entry up a little bit. Then the next pivot, we can move our entry up a little bit to right here. And what do we have? Boom, here's our entry. Right here's our stop out. And is that enough for you to get a couple points? Absolutely. If you entered it here at 63, down here, it's at 56. That's about $400 per one contract, right? Now, if you come into the day and you want to make 200 to 400 bucks, you took this trade right here, which is a great setup. Guess what? You now are done for the day. You get to go and enjoy the rest of your day. Why do I tell that? And a lot of new people coming in, simply because of this. If you get green and you take one or two trades and you have a 100% win rate, we know over time we don't have a 100% win rate. We do take losses. So there's going to be a loss that's coming sooner or later to bring us back to that, right? Back to that average. Similar to like people know what VWAP is, right? Price expands up away from VWAP. You know price is going to come back to that central mean, right? And I like to say trading is the same way. If you're on a huge win streak, you're going to lose sooner or later because the probability says so. So a lot of new folks I feel come in and want to sit at their computer all day because they think it's going to be more money, but then they end up taking a loss, and then they take another loss because they revenge trade. I don't want you to do that. So this first trade on ES was a good one. Then price comes down here, it bounced back up. I'm going to take a breakdown right here, and then we got a breakdown right here. And once again, there's $150 you could have taken if you're looking for another trade. Then I took a breakdown right here for another trade, and there's another 150, 200 bucks after your trails get stopped. At that point, my goal is the first 30 to 45 minutes to try to find winning trades for you guys and go walk away, right? So ES was pretty good today. As you can see, if we scroll over here, you would have got a reset up here and it almost broke out. Then you would have got a breakdown simply right here for another trade if you were still trading. But I mean, it does work a lot of the times, but understanding the market does shift in the middle of the day, you know. So that's another reason why we like to get green, stay green, and keep trolling away. Now, on this chart where the smiley face is with the tongue sticking out, this is I like to say, a grand slammer. Of course, it stopped me out way too soon, but once again, candles were green, we turned red, we called a breakdown right here, and guess what happened? Price ended up pushing down, and this is your stop. It came down here, came back up, freaking stopped me out, and then went all the way down there. Moral of the story, I could say, well, if you took this trade right here at 47, and it came down here to 47 or 52, there's 100 or 95 NQ points. But guess what? Realistically, you're never going to get that. So could you have gotten a piece out of that move? Yup. 44, I ended up getting stopped out around 12 or 15. So I ended up getting about 25 NQ points. Am I mad? No. I'm happy because guess what? There's a lot of people struggling to get winning trades that we continue to do this over and over and over again. So NQ right here, that first trade right there, that was one winner. Then after that trade, this pivot hit it, and you can see it broke down. Here was your stop out right here. And if you stuck your stop out right up there, you'd have got stopped out. I took a loss right there. It hit the stop loss. Then price came back down. I took another breakdown right here and put my stop loss there again because I know if a 50% win rate, my probability to get winning trades is 80 to 90% on the day trade side. Guess what? Boom, there's another winning trade. Then I called out another one right there. You could have taken a trade there. There's your stop out. Boom, another winning trade, and you're done. So there is a loss. I did take a loss today, but the power is staying consistent, trading your plan, and using risk management. Don't ever let a loss dictate how you're going to take the next trade. If you let that happen, you're trading too much, right? Now, coming over here to where the star's at. This is our CL chart, CL futures. Guess what? This red bar hit the line. I called a, well, this is pre-market, but coming into the market right here, our bar hit the line. I didn't take a breakdown right there. I didn't move it up. I should have, but I ended up taking the put trade right here. And guess what happened? Bang. I ended up getting, I think, I want to say 10 CL points. Once again, it moved like 25 or 30, but that's all right, you know. Then price bounce, come back up. We got a color change right here, and you could have taken a breakout right there. Boom, there's another one. So once again, that's at 10:30. That first trade, I was basically done on it, and I walked away. So that's how I trade futures. I do have some options traders as well, and I'm going to show you how we took and navigated Tesla this morning. Now come to the circle on the screen. This is Tesla, right? 5-minute bar. Price came up, and we wanted green. I wanted to break out right there, and we simply never got that. Sorry, I did that little bow hook there. Didn't try it. And then our bars went red at a pivot. I want to take a breakdown here. Then we bounced back up. And I said, all right, guys, if we break out right here, 450, 150, I like some calls. This thing went up to 450, 450. There's $3 of movement on Tesla. That's enough to get you an easy 15 to 30% on a day trade. You could have made a little bit more if you would have got stopped out at the tippy top. But once again, I like to be more. Can you get a piece of the move? You're never going to get the whole move. So I did call that on Tesla. Then coming over here to this one. What do we got here? Let me turn this off. And we go to SPX. Called this trade out right here. And the power of this one is you see our AI Lotto. See our AI there? Guess what? Price, we want to take a contract right around this range. Right at give or take, you could take any of those strikes. But if we get close to this Lotto low and or use this one, these have a high probability to go 50 to 100% ROI. So we simply wait for the market to open up, and we wait for it to either expand up or expand to the downside, right? Called out a breakdown right there, and price ended up going against us. Bam, coming down. Everybody made some money, and we are happy. So we are on a 10-day win streak, I believe, on SPX, and trading that same exact plan. So now, that's how we day trade. And that's just two patterns or two different systems that we have based off the risk preference, right? This lotto system, I call it a lotto because our losses are a little bit larger, and some people may not like to, or they can't stomach the large losses, the larger losses. So it wouldn't be for them, you know. Also, you have to be able to react when something happens, and stay dialed in. If not, then you kind of give it back. Like you don't do as good. So coming in here to the swing trading, I'm gonna go to Apple, right, and we're gonna change this to the daily time frame, 1 day. And we are getting a nice reset today, but that's totally normal. Now I'm going to show you a nice pattern that we have that we can trade, that plays out over and over and over again. And we have people inside our group. A lot of people work together. We all link arms, and we do this together. We look to see what is potentially happening. Now, a pattern so simple: a green candle, green arrow, a green candle, green arrow, green candle, green arrow. Guess what happens? We expect price to push up over the next couple days, right? So check it out. If you took this green candle, green arrow, did price push up? Yep. Did price push up? Yep. Did price push up? There's 3 winners, right? There's 4 winners. There's 5 winners. This one would be a loser, 5 and 1. This one, 6 and 1. This one, 7 and 1. 8 and 1. 9 and 1. 10 and 1. 11 and 1. Now let me ask you this: at 11 and 1, you have 12 total trades. Just for full transparency, we started this thing at August 6th. August, September, October, November, December. That's 4 months. So we have about 12 trades in 4 months. Average, you get what, 2 to 4 trades, give or take, a month. So if you watch a couple different stocks, then you can get more trades than just taking 1 or 2 a month. But I like to take quality trades, not quantity type trades. Are you following me? So understanding the 11 and 1 probability, 11 divided by 12, guess what? You have a 91% probability. I'm going to take a stab and say we are overperforming by a little bit. We're probably going to get a loss or two to come up, because even if we went 11 and 11 divided by 14, we take 11 wins, 3 losses. That's a 78% win rate. We're still net profitable. If you come over here to your probability, it says 85%. We are about 85%, almost 86% on Apple. So knowing that, when we have a 90%, 91% streak, we know that we are right above expectations, and we all happy. So that's how we can day or swing trade. All right. We do have other strategies that we do have, but I'm just going to share with you this one. Very simple that I feel even a middle schooler can understand. Now, how do we invest? We take the same tool, and now we come down to the weekly time frame, right? And I'm going to come in here, and I'm going to say, well, since, what is this, March of 23, right? About 2 years, 2.5 years, how could this investing have played out? Well, say you have a measly $1,000, and you put in $500 right here, right? And your average price is 157. It goes up to 200. There's 33%. Price comes back down. You get another buy, and let's say you put in another $500 right there. Now your cost average is about right here, and now you got 1K total in the markets. Well, guess what? At 167, price comes up here, right, to 260. That's 50%, give or take. Your 1K is at $1,500 right here. Guess what you can do? You can sell out, right, and let $500 ride. Now you have free $500 in this, and you have $1,000 back on the side. You just grown your account by 50%. You're outperforming the S&P, going at 10 or 12% on average over the years, right? So then, if you want, you could put in another $500 buy here and here. Now over here, you got $1,500 back in the market. So then your average buy-in price goes to about 200. Well, guess what? We're up here and hit 288. So we are at almost 50% again. So now, guess what? Your 150, like your 1,500, is now, we're just going to say 2K up here. Guess what? You're going to sell out. You're going to let your 500, or we'll say 1K ride, and you're going to bring the other 1K back to the side. All right? So now we just grown our account by 100% ROI in 2 years, only trading this symbol. What I'm about to show you next is the true game changer, right? So keep in mind also, every 4 of these bubbles, 1, 2, 3, 4, there's 3%, there's 6%, there's 9% of free shares. So we actually made an additional 10% on that, right? So I'm going to erase all this. Now we come into something where Apple's part of the Magnificent Seven, right? They like to say. So we're going to do something different, right? And we're going to go into the Bitcoin. Bitcoin is completely different than than Apple, right? I'm going to go back to the same exact period of 23, so over a 2-year time frame. We have 1K in Apple, and we have 1K back on the side. Now, because we've grown our account, we can put in 1K here at this point right there. Well, guess what? 17 at 34 right here. Let me get my drawing tool. At 34 right there, it's at 2K, right? Up here, it's at 3K. But what I'm about to tell you is when your 1K turns into 2K, sell out. So then you have 1K here again, and now you bring 1K back to the cart. Then your 1K up here turns into 2K, bring 1K back. Now we have 2K on the side while we still have $1,000 in the market, right? Then what happens is price resets, you get another buy here, and you might put in another 1K out of this. So now we got 2K into Bitcoin. And if we bought here and bought here, our average is about 30. So guess what? At 60 right here, we at 4K. You know, I'm about to tell you, sell out, bring 3K back. We now have 4K. You still got 1K in the market for free. And we're getting ready to get another buy opportunity or investment on Bitcoin. So that's looking real good, right? Now we start off with $1,000. We got 1,000 in Bitcoin for free right now, 1,000 in Apple right now, and we have $4,000 on the side. Guess what we can do? We can now invest that into another company, and you see how we're branching our generational wealth tree, being strategic with the plan, right? The reason why I do it this way is because, say you buy 4K, I believe, or I don't believe, I'm confident enough that I can outperform the typical investments, the savings bonds, savings accounts, the money markets, because say you have 4K and you put in 4K right here at a measly $10, right? Up here at $50, your 4K is worth 20 grand, right? And guess what happens? Back down here, your 4K is worth what? 3K. Then back there is 4K. Up here it's worth 20 grand again because you're up 400%. And then up here, your 20K might be worth 30K up here, right? So from 4K to 30K, that's great. I mean, that's real good money. Now, the reason I don't believe in hodling all the time is because, check it out, your 4K is now worth 30K, right? And this is what I believe, right? Instead of just holding it, I start off with the same 4K right there at 10, right? At 20, it's now 8K. At 30, it's now 4, 8, 12. At 40, 50, it's now 20K. But guess what? When my 4K turns to 8K, I'm selling out, and I'm going to bring back, right? I'm going to bring back 6K and set it off to the side because I secured profits. Then when it goes all the way back up here, my 2K is worth 4 or 6K again up here, right? Another 6K. So I'm going to sell out and bring 4K back and let 2K ride. So now I got $10,000 on the side that I secured profits on, right? Then price ends up steamrolling back down. We get another buy here. We have 2K. I'm going to put in 4K again. So we got 6K floating in right there. Here's our cost average of 15. Well, at 45, our 6K, right, is now worth, that's from our average, what is it? 21 to 50, 55. That right there is what? 20 to 40 is 100, 55, we'll just say 50. That right there is 150%. So your 6K is now worth about 15K up here, right? Sell out, let 2K ride, bring back $13,000, right? So now, guess what? We have $13,000 plus we still have the money we took out of this 10K, right? So 13,000 plus 6, that is that's $19,000 we have, right? Then we get this huge sell-off. But guess what? We're protected. We got $19,000, we got 2K in the market, and we're waiting for our next opportunity to work out. So you have 30K here. And remember, each one of these are buys. So you're not doing a lot of work. You're letting the software do the work for you. So then we get this buy down here, right? if this was our average price before, and we have 2K in the markets, we have 19K. Let's say you want to put in, what do you want to put in here? Do you want to put in 4K? You want to put in 6K? Let's just say we put in 5K of it. We take 25% out of there. So now we have $7,000 in the market, and this is our baseline, our cost average at $15. At 30, right? You're up $14,000, right? At where's our baseline at? 20, or I'm sorry, at 17. So at every 20, we're up 100%. So let's redo this. So at 40, we up $14,000, right? At 60, we up $21,000, right? But this is the thing. When our 7 goes to 14, I'm going to sell out, and I'm going to let 3 or 4K ride, and I'm going to bring 11K back, right? I'm going to bring 11K back. So that 19 that we took 5 out is really 14, plus our 14K, we're going to let 3, 14 plus 11 is $25,000. So we got 25K on the side. Then we take our profits out there. We have 3 grand. Our 3 grand up here is now 6 grand. Sell out, bring 4K back. Now we got $29,000 in our account while we got 2 grand into the market. Then we get this last buy right here, right? So if we bought in there, this is our average, we buy in there, our new average comes up to about roughly right here, about 40. And if we have 2K in the markets, we have 29K. Let's say you want to put in 25% of that again, and let's just say we put in 30% of it, or 33%, right? You're going to put 10K in. So now you got 12K into this pot. Well, at 30, at 60, your 12K is worth 24K. There's no way, right? There's no way you're going to let all that ride in there. So we just went from, we had 2K and we put in 10, so we got 12. So our 29 went to 19. Sell out of this, right? And let 4K ride. Bring 20,000 back. Now we got $39,000 off to the side right here. And we go up here to 90. You're 24, you let that 3 grand ride. Your 3 grand way up here is now worth 6 grand. So guess what? Sell out, let 2K, 4K ride again, and now you got a juicy pot of, right, another 4 grand. So now we got $43,000. $43,000. We start off at 4 grand way over there. All right, do you see that? That's the power of strategic investing, right? Letting the software buy into your time. And you could say, well, Brandon, I could just buy here and hold it to right there, and my $4,000 is worth $20,000 right here, $25,000. Yeah, that's right. You could do nothing. But what I'm trying to show you is, guess what? I have $43,000 in the side account, right, to do whatever else I want with this. I messed that up, 43,000, to do whatever else I want to do with this, waiting for another smart investment while you have your money in the market, so it's technically at a slight risk. You get what I'm saying? So that's how I know I can outperform the typical investment savings account, the S&P 500 just doing it by itself. So it's not a lot of work. You just simply wait right here on your phone. You get an email or a zap. Right here's a buy. There's 1. Here's another buy. There's 2. There's 3. There's 4. In 3 years or 4 years, you got 4 buy opportunities. That's not time consuming. Every so often, every couple of weeks, you can check in where your account is, or you can set an alert and press put an alert in right here. Once something's hit, guess what? Now when price hits that level, I'm going to get notified about it. And that's how you use the software to your advantage from strategic smart investing. Anyway, that's my rant for the day. I appreciate you guys. If you like what you see, just comment beast mode in the comments. We'll get you squared away. Oh, I felt it coming. So with that being said, hey, don't do nothing that I'm going to do because I'm crazy and wild. You guys have a blessed day. Tomorrow, I'm going to take 5 people, invite them into the trade room. If that's one of you, just comment on here, and we're going to rock it. You guys have a blessed day. See you tomorrow. Beast mode out.